Hi guys. Happy Thursday. Let's see if we are working. Let's see. Looks like there's a delay. Let's give it a second. It is not, let's see. Should be there, should be there. Are we there? How's everyone doing? Happy, what is it, Thursday? We're in November. All the things, right? So let me make sure I can hear myself. It's always my mic that I'm concerned about. I see that we're live, but can we hear me? Let's find out. All right. It's fine. Everyone needs time to get in anyway, right? If you're watching live. It's fine. Everyone. Perfect. All right. Welcome. Hello, everyone. Happy Thursday. All right. Today, this says home office. We're talking about mileage. Let's just fix that so I don't confuse myself later. All right. We're talking about mileage and business use of your automobile. So yeah, that's what we're going to get started on. If you're happen to be watching live, I'd love to know where you're watching from. If you're watching on replay, feel free to share as well. And as always, I want to start with a big thank you, right? Thank you for your time. Okay. I know time is our most precious commodity. It is a finite resource. So the fact that you've chosen to spend your time, whether you're watching live or you're watching on replay, the fact that you've chosen to spend time learning from me means the world to me. So thank you. If you do not know who I am, hi, I'm Bree. Bree Beers. I own Bree Beers and Associates. We are a tax advising firm based out of Denver, Colorado. We do tax prep, tax planning, tax advising. Just name a couple of things. I am a CPA. I'm a certified tax coach, advanced tax strategist, a fractional CFO. All these titles that I've earned either through taking tests or courses. And where I really pride myself is in where I've learned most of what I know is in my 20 plus years now in accounting. All right. I started in financial and corporate accounting. I've spent now 12 tax seasons doing taxes, and I've spent the last 7.5 years as a business owner. I own my own firm. And for most of that time as an entrepreneur, and maybe even a little bit before that, I was really I spent a lot of time really learning the tax code and figuring out how that tax code can be applied to help my clients, right? And I think we a lot of times think of think of tax strategies and tax planning as something for the rich. And while the rich can, definitely they have the resources and the team and the money to take advantage of tons of the loopholes that exist in the tax code, it can be used by almost anyone, right? As long as you have a business or some sort of business type entity in place, you can take advantage of the tax code and how it's written in order to minimize your taxes, right? And so my goal is to educate people and help you guys as the middle working class, whatever you choose to call yourselves, us normal Joes, in helping us figure out how we can lower our tax bill, right? So that we have that extra cash to invest into our futures, right? I believe that tax planning and tax strategizing is the first step toward building your own wealth, right? Because if you are able to have more cash without actually making more money or cutting your expenses, right? Because you're still making the same amount of money. You might still be spending the same amount of money. But if you're able to lower that tax bill, there's extra cash in your pockets that you can utilize to, reinvest back into your business, to invest into your retirement, into passive investments, into your kids' college, whatever you choose to invest that money in, right? It's yours to, it's your choosing. But my goal is that by cutting your tax bill, you have that extra cash to invest into yourself and to build future wealth. Okay, so today we are talking about that auto deduction. We're going to talk about mileage. We're going to talk about your auto expense. And really, we want to start with, right, what is it? Okay, because so many of us hear about, oh, do you use your vehicle for business use? Are you taking advantage of that? And a lot of times you don't know exactly what that means, All right. And so the auto deduction, you guys, it can look a few different ways, but what it is, it's deducting the use of your vehicle for business purposes. It's as simple as that. All right. And who can benefit from this? Any business owner. If you're a business owner and you're using your vehicle for business purposes, you can utilize and take advantage of this auto deduction. All right. So now we get into the how. And if you're not new here and you've been around, right, we talk about qualification, documentation, and reporting. Okay. And today there's two different routes we're going to talk about. So we're going to start with the standard mileage deduction. This is the easiest route. This is the most utilized route. This tends to be used. Standard mileage deduction must be used if you don't use your vehicle more than 50% in your business, right? Because there's standard mileage deduction and there's your actual expenses. We'll circle around to the actual expenses at the end. But standard mileage is where we start, and standard mileage is where we're actually going to spend most of our time, because this is where most people fall. Okay, standard mileage deduction, if you're using your personal vehicle for business use, you can take advantage of it through the standard mileage deduction. And so we want to talk about that qualification, documentation, and reporting. Okay, so the first thing is qualification. So what do you got to do in order to take mileage deductions, right? So you have to be a business owner of some sort, right? And we use that term, it's very broad. All right. A lot of people are like, oh, well, it's my business is actually just my side hustle, or it's just this hobby that I'm trying to turn into a business. Great. Perfect. That still qualifies. All right. Some of us, our business looks like a real estate portfolio, right? Maybe we have a couple investment properties. That's our business. Great. All right. It does not have to be your one and only job and your primary source of income. All right. So many of us out here, right? We have our W-2 job, and then we have our side business, right? We have a business that, whether we're just trying to supplement our income, our W-2 income, or we're trying to build this business into something that can replace our W-2 income, it doesn't matter. The point is, right now, it's our side hustle. It's not our main source of income. Still counts as a business. All right. So what's cool is if you have a home office, which we talked about, I don't remember if that was last week or a while ago. It was a while ago. But if you have a home office, you guys, any business related mileage is going to be deductible, because what we do when we have a home office is we eliminate any commuting miles. Okay. If we don't have a home office and we have an office space that we have to commute to, then unfortunately our mileage from our home to our office space is not considered a business deduction. All right. But mileage from our office space to any other business event is going to be deductible. But we have talked about that home office. So think about this is like a bonus plus side benefit. That's the word I'm looking for, to having a home office, is that when you have a home office, you now can increase the mileage that you actually consider to be business related. Okay. And the other qualification, you guys, is you got to log your mileage. We'll talk about that in documentation, but in order to know how much you can take, to know, to qualify, to ensure that the mileage you're driving is a business deduction, you've got to log it. All right. And that brings us into documentation. All right. So there's two methods you can use when you document, and both require you to track your mileage. So right now we're talking about the standard mileage deduction, but even if you use the actual mileage that we'll talk about in a moment, you still got to log your miles. All right. There's no way around this. If you're wanting to take advantage of the mileage deduction, you got to log your driving. All right. Most of my clients, when they come to me, I recommend Mile IQ. It's an app. There's tons of apps like it. So dealer's choice. You might have a Excel spreadsheet where you log your mileage. That's fine. You might have a notebook that you keep in your console of your car where you write down what we're about to talk about, what we have to, log. That's fine too. However you want to do it. All right. I like the app because all of us have our phones. We are on our phones quite often. And what's also kind of cool about the mileage app. So my husband uses it. He's a realtor, and he has it on his phone. He has it tracking his driving, and he is not good about using it until I say, hey, it's time to do our taxes. What's your mileage? And then he spends hours swiping right and left, because one way is swiping for personal miles, one way is swiping for business miles. And so he gets caught up. So it's good for those of us, and I know there's lots of us who are not good about tracking that mileage on a regular basis. So these apps are great for that if you do have to play catch up. All right. And then what we'll talk about in a little bit is that actual expense. And that's more complex. And we'll talk about that. How you document for that in a minute, a little bit. So reporting. Okay. So you qualify, you have a business, you're using your car for business or your vehicle for business. Check. We're documenting, we have our mileage log. All right. And now how do you report it? Okay. How do you report it? So this depends on whether you are in bucket one, which is your self-employed, your single member business, right? You report it on Schedule C. Okay. Or if you're a partner in a partnership, or if you're a corporation. All right. So we're going to start with my self-employed. So if you're self-employed, you're a single member business owner. So you file a Schedule C on your 1040. All right. What you're going to do is, if you have a tax preparer, you're going to provide that copy of the mileage tracker to your tax preparer. If you're using an app, you're going to print it out. There's a really easy function, so you can print it out and give it to your tax preparer. All right. If you don't have a tax preparer, you're doing it on your own, fine, great. We can handle that too, right? So what you're going to do is you're going to be able to enter that mileage, your total miles driven for business use, into whether you're using TurboTax, H&R Block Online, whatever program you're using, it's going to ask you if you drove a vehicle and how much you drove. All right. How it works, you guys, is in terms of how the deduction is calculated. It's those total miles driven for business times, for 2024, it's 67 cents a mile. Okay. So if you drove 1,000 miles for business, you're going to get a $670 deduction on your tax return. Okay. And again, when you're self-employed or you're a single member business owner, like a single member LLC, this is going to be reported directly on Schedule C. There is a form, it's called Form 8829, that you have to file that supports your Schedule C. And this is very important, because if you file that Schedule C and you have an auto expense and you don't include the Form 8829, there's a good chance the IRS is going to come back and say, hey, we need more information for you to take this deduction. All right. And that's just one of the many reasons I'm always going to be a proponent, whether you work with us or someone else, but that if you own a business, one of the first things you should be budgeting for is a tax preparer or a tax advisor to help you with these things. Because it's a pain in the butt if you do, your report or you're documenting everything right, you're following the rules, but then you report something on the wrong line, or you forget to submit a supporting form, and the IRS comes knocking and it stresses you out. Even if you're right, it's still work that you have to deal with. And that's, not something we need to do. We don't want to deal with that, right? It's unnecessary headaches and stress. All right. So if you are a partner in a partnership, there's flexibility. You can either be reimbursed by the partnership for your expenses, or you can report it as an unreimbursed partner expense directly on your individual return. That's your choice. Some partnership agreements outline how they want this done. Some don't, and then you can choose. It's up to you and your partner. But either way, you've got to have that mileage log, because you're either going to, if you want to be reimbursed by the business, by your partnership, you're going to have to submit that mileage log to whoever's responsible for paying your bills. Even if it's you, even if you are also the bookkeeper in your partnership, you as the individual need to submit the mileage log to you, the bookkeeper. All right. So the bookkeeper can cut you, the individual, a check. All right. You can, and then when that happens, the partnership simply deducts the business mileage on their P&L, on their business P&L, and therefore on their tax return on their 1065. If you're not running it through your partnership, and instead you're going to report it as unreimbursed partner expenses, then again, you're going to want to give a copy of that mileage log to your tax preparer, because those of you that have partnerships absolutely should be having a tax preparer. And then the mileage log is going to be reported with your partnership activity on Schedule E. And then if you're a corporation, including those of you that are any sort of entity taxed as an S Corp, in order to take advantage of this business mileage, you're going to want to set up an accountable plan, all right, to reimburse you for your mileage. Now, keep in mind, this is not for vehicles that are completely used in the business. So if your business is a delivery business and you have a delivery van that is 100% business use in the business, that's not what we're talking about. We are talking about the mileage for business use on your personal vehicle or a vehicle that's used between the business and you personally, okay? So we're going to talk real briefly about the actual expense deduction because it's complicated, okay? It is not something I'm going to sit on here. It would take me an hour to go through the actual ins and outs of taking your actual expenses. Okay, but we are going to kind of go through the qualifications and why you would want to consider this, right? If standard mileage is so much easier, why would I want to take the actual expenses? Okay, well, we'll start with qualification. So again, you've got to be a business owner. When you're wanting to take actual expenses, the vehicle must be used at least 50% for business. The vehicle must be used at least 50% for business. Okay, and then you've got to track all of your auto expenses and all of your mileage because you have to prove that 50% or more usage. Okay, so it gets a little, your record keeping definitely gets a little more complicated, right? So because instead of just tracking your business miles, you also have to track your total miles, which secret tip that I learned from one of my besties, Jamie Troll. If you take a picture of your odometer on January 1st of every year, you'll know your your total mileage. All right, then you just got to track your business. Okay. And then you've also got to track all of your auto expenses. All right. We're talking gas, maintenance, car washes. Tire rotations are maintenance, but yeah, all of those expenses with your car, you have to track them all. Okay. And then how this works, you guys, is you can. So let's say your vehicle is used 60% for business. You've tracked all your miles. You tracked your business miles and you use it 60% for business. Then what you're going to get to do is deduct 60% of all of your auto expenses for the vehicle for the year, the gas, the maintenance, the service. Okay. And the benefits to taking the actual, you guys, is that it tends to be a higher deduction because you get to take depreciation expense and you get to take interest if you have a loan, or you get to take your lease payments if you're leasing it. All right. And right now, I say right now, but as long as I've been doing tax, there's been bonus depreciation rules that allow you to take a higher deduction in the year you place the vehicle in service than if they made you do the standard depreciation. Okay. Again, not something we're going to get into. I have hiccups. Not something we're going to get into because it's complicated. All right. But it's something that you'd want to consider if you use your vehicle more than 50% for business, because it could result in a higher deduction to you. All right. And the documentation reporting piece is, at this point, you have a tax preparer. All right. I have yet to see, and I'm sure you guys exist. I am sure there are those of you out there that can do this on your own. But I have yet to have a client who came to me who was like, yeah, I used to self-prepare and now I need a tax advisor, who did the actual expenses for their vehicle either at all or did it correctly. Okay. So have your tax preparer calculate. They use the method. They have software for this, right? Honestly. And a lot of times, you guys, your tax preparer is going to be able to do both and tell you which one's more advantageous. Okay. If you qualify for both. All right. So that's pretty cool. So that's it, you guys. And so at the very minimum, you should be tracking your business mileage. Okay. So that you can get a 67-cent per mile deduction, right? It's driving you're probably doing anyway, so you might as well get a deduction for it. Agreed? And when we talk about what is business mileage, because it's a question I get a lot. Okay. So obviously it is, there are certain tasks you're doing that you're like, yeah, I know that, right? Like going to visit clients. Yes. those are business miles. But things people don't think about that you should keep in mind. All right. If you are going to, let's say you have to go to the store to buy supplies, if you make things, right? If you have to go to the store to buy supplies of any sort, that's a business trip. People tend to forget to deduct their mileage for meetings. Like when we're talking about, like, we're going out to dinner, right? We talked about meals in a prior training. All right. So meals when we're going to meet with clients, potential clients, vendors, potential vendors. All right. Those meals are deductible when we're going out. So is the mileage, right? So the mileage to and from the restaurant, okay, is deductible. That's business mileage. And I think so many times I get clients who are like, yeah, I don't track it because it's not a lot. And I said, I challenge you to start, right? Or I say, I challenge you to spend a few minutes and estimate, right? Go back and think about the trips you took last year, showing houses. That can really add up if you're a real estate broker. Or if you are an appraiser, right? You have to go visit properties to make appraisals on the properties. But I challenge these people to go and try to estimate, like, okay, you didn't track, great. Give me an estimate. What do you think you drove? Go through month by month, look at your calendar, see what you did, and estimate. And people are so surprised by how much more they're driving than they thought they were. Okay, so, and it's such an easy deduction, you guys, to take. There's no reason not to take it. Okay, even if you don't drive a ton, right? Even if you drive like 1,000 miles a year is not a ton, but it's a $670 deduction. All right, so track those miles. This is something that should be on every business return in some extent. For those of you that have a rental portfolio, right? Driving to go check on your rental properties when you have to do that. Or if you have to go pick up a rent check, that sounds so weird and so old, but I know I have clients that still do that. All right. Going to pick up that rent check is deductible, right? And so just think about that and start tracking those miles, whether it's in an app with a spreadsheet or, in a notebook. The last thing I want to just talk about briefly is what do you want to track in that mileage? So when you're using an app, it takes care of making sure you're tracking everything that you need to. But you want to have details, okay? So yes, you're going to track the mileage. You're going to say, okay, I drove 10 miles, but I want to know where you went. The IRS wants to know where you went and what makes it a business purpose. So I drove 10 miles to a restaurant to meet with a potential client. All right, I drove X amount of miles to this address to show this client a house, whatever that looks like. And when you're using the apps, it's super easy to add those notes. All right, and those notes are just like a cover your butt in case you get audited. All right, so that's it for mileage inductions. If you guys have questions, always feel free to, I was going to say comment, but I'm not very good at it. I hired a VA, so hopefully they'll help me monitor you guys' questions and comments. But I'll tell you, so we have a plan coming up for the rest of the year. We're going to post this on the Facebook group. If you're not in the Facebook group, Money, Taxes, and Finance for Small Business Owners, join that because we'll put the schedule in there. So we're going to start our business structure series. Mark, I missed you. Hi. Go back and watch the replay. It's fine. So for the rest of the year, we're going to do a business structure series. And what we're going to talk about over those times is just how the different types of business structures are taxed. So next week, we're going to talk about taxation of solopreneurs and single member LLCs. So that's those of you that have a business on Schedule C. On the 21st, we're going to talk about taxation of S Corps. We're going to take Thanksgiving off. And on December 5th, we're going to talk about taxation of partnerships and C Corps. I lumped those together because we don't have a ton of C Corps and it's simple. And then on the 12th, we are going to talk about, sorry, I left it blank. Sorry, I'm going to update this while you guys awkwardly watch me. And C Corps. And then on the 12th, we're talking about taxation for real estate investors. Investors. All right. And then on the 19th, that'll be our last training of the year. We're going to do a Q&A session. Starting in 2025, we're going to incorporate these Q&A sessions more often. I don't know what that's going to look like exactly, But for now, we're going to end the year with the Q&A session. So that's that on the 19th of December. So we will have some posts in the Facebook group, asking for questions just in case you can't make it live that day. But if you are able to make it live, those of you that make it live, your questions are going to take priority over the pre-submitted ones. That's the word I'm looking for. So awesome. So, all right, that was good. I'm really trying to keep these to 20 to 30 minutes. So we're good. All right. I'm really excited for the last stretch of this year. One more, obviously, I'm going to plug real quick. We still have very limited time to talk about 2024 tax planning with you guys. We offer free tax analysis. It's a super simple process, you guys. If you are interested, there's a link somewhere in this live. All right. That link is going to ask you, I think it's like 6 or 7 questions, and you're going to schedule a 15-minute call with me. And we're just going to figure out if you are in a place with your business to implement some tax strategies for 2024. Oh, hold on, Mark. 2024 and going forward in 2025. And I lost my train of thought, Mark. Sorry, because I got excited. I saw your comment. So where was I? Oh, tax savings. So it's a free call. We do a free tax analysis to be able to show you, like, here's your potential savings. We are running up on our deadlines for doing 2024 implementation, but there's still time. So if you can get in with a tax discovery call with me next week, we will still have time to implement a 2024 plan if you qualify. But even if you can't, we can look forward and build you one for 2025. I'm really excited about this. Mark, great thing. BOIs. I haven't done one on BOIs. And honestly, it's because I really, really thought they were going to find them unconstitutional. I'm not going to, there was so much talk about the fight against them that I thought they were going to tell, they were going to say, don't worry about this. We got rid of them. It's not required anymore. Not happening. For those of you watching this, the BOI is a new filing requirement that they have implemented. So all existing businesses have to file it by 12/31. We do not do it, but I actually have some starting, I think, in next week's newsletter, we'll be giving instructions on how to do that. And maybe I'll pop in here and do that. I'm going to think, I want to think, Mark, about how I can implement that into our live training. So that's a great one. But for sure, if you're not already on our newsletter, guys, get on it because it'll be in there. It's super easy. We did ours already for our business. It's a super easy filing requirement to do. You just got to do it because the fines are heavy. I think it's crazy. It's like $500 a day if you don't file. So great question, Mark. Get on the newsletter. Otherwise, I will find a time to do a live on it to talk about it because it's an easy one for me because I've done a lot of research on it. So, all right, you guys, have a good one. Enjoy the rest of your Thursday. Enjoy your Fridays. I don't know how the weather is where y'all are. It is snowing it's bananas here. I mean, I live in Colorado. We get snow. But it was supposed to stop snowing at 7 a.m. yesterday. It's still snowing 28 hours later. It's crazy. So I'm going to go. That's why I'm in the hoodie and not no, I'm living my best hoodie life. So y'all have a good one. Mark, I love when you're here. I appreciate you. And we will see you guys next week. Bye.